Will AMD's stellar outperformance this year continue, and is it looking to turn a page on declining revenues and declining EPS as it focuses more towards its AI business? Hey guys, hope you're doing well out there. Today we are taking a look at Advanced Micro Devices, ticker symbol AMD. They just reported their earnings after the bell, and shares are reacting positively, up nearly 5% in the after hours. We'll dive into their high-level overview of this past quarter, take a look at some commentary by Dr. Lisa Su, the CEO of AMD. As always, jump into their financial reports, take a look at it from a segment data. We can see client segment declined substantially and how that impacted their profitability. And as always, jump into the technical chart patterns for AMD. This one's been on a straight rocket ship up, and we'll see if that can continue. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. We're on the road to hit 100 subscribers, and it would be greatly appreciated. Taking a look at AMD, this one's market cap has ballooned up to $184 billion after a stellar outperformance year to date, up 83%. Over the past year, up 18%, and it's recovering much of those 2022 losses, as we saw many mega cap tech decline substantially in 2022. Taking a look at AMD's results for this most recent quarter, we see revenue falls 18% as the PC market shows continued weakness. Taking a look at their results, AMD posted a revenue number of $5.36 billion. This beat consensus estimates of $5.31 billion. And they posted an adjusted EPS of 58 cents per share, in line with analysts' expectations of roughly 57 cents per share. They did provide third quarter guidance, and AMD expects $5.7 billion in sales for this upcoming quarter. Analyst expectations were closer to $5.81 billion, so slightly missing forward expectations. In this most recent quarter, they reported net income of $27 million, or 2 cents per share, down substantially from a year ago, which was nearly at $500 million and 27 cents per share in the same quarter last year. AMD's total revenue dropped roughly $7 billion from a year ago, and they've reported 2 straight quarters of declining revenue. Now, this is largely in part due to a slowdown in the recent global PC market, and this specifically impacts their client segment, which we'll look at, and how that revenue has shriveled up. AMD did mention that it is focusing more on increasing AI R&D, and the company has developed an AI strategy, including AI-specific chips. They're also looking to take more market share away from Intel. Intel reported earnings last week, and they had positive guidance for the future, where they said they have roughly $1 billion in backlog towards AI chips, hoping to be shipped next year. And so if AMD can hum a similar tune on their conference call, it should fare well for this stock. We see global PC market declined roughly 54% on a year-over-year basis, and that is largely what's causing revenues and earnings to be down on a year-over-year basis. We see AMD noted conditions are improving on their AI applications, which could help spur demand for future PCs. Now, one thing to note, in this most recent quarter, they announced a new chip, particularly the MI300, which is used to build and run the kind of AI models that are at the heart of applications like ChatGPT. And this is really what AMD is betting on. So the PC market is sort of looking at their past, and they are focused more heavily on these AI chips, these chips that go into massive servers used by companies like Microsoft, AWS, and Alibaba. And these AI chips power these massive servers to run offerings such as ChatGPT and other AI-powered software. Taking a look at some comments made by CEO of AMD, Dr. Lisa Su, she said AI engagements in this most recent quarter increased by more than 7 times, and that's good to see. So we like to see AI engagements being driven up, and that's largely, I believe, the reason investors are giving AMD the pass on these declining revenues and earnings, because they're driven by a slowdown in PC demand rather than a slowdown in AI demand. And we know AI demand is only expected to increase in these upcoming quarters. taking a look at their forward estimates by analysts, we see in this past year, EPS and revenues are both expected to decline on a full year basis. However, this is expected to ramp back up nicely in the subsequent years, and that's attributable largely to this AI run. I do want to highlight AMD did mention that they are now delivering high performance and accelerated compute for clients like AWS, Alibaba, and Azure. And so these are your three massive cloud players that are basically building their entire business on the basis of AI. We know Azure and Microsoft is embedding ChatGPT and AI-powered products such as Copilot in so many of their applications. And so if massive companies like an Amazon, like Microsoft, are expected to continue building out their AI servers, guess what's needed for those? These AMD chips. And AMD is basically in the number 2 position in terms of chip making for these AI-powered servers, right behind NVIDIA. Intel, they have lost market share over the last few years and haven't really executed up to expectations, and so AMD has been able to take market share away from Intel, which has proven good for its stock. Moving on to the income statement, we see these numbers are in millions, so add a couple zeros over here. This left-hand most column represents the most recent quarter, so Q2 of 2023. The middle column is Q1 of 2023, so a quarter ago, representing a quarter-over-quarter outlook. And then the rightmost column represents Q2 of last year, painting a year-over-year picture. We see revenues declined 18%, down to $5.3 billion. However, cost of sales were also able to be cut in line. We see total cost of sales came in at $2.9 billion, down from $3.5 billion a year ago. And so if we do the math on that, we take 2.9 divided by 3.5, we see total cost of sales were roughly down 17%. And so when you see revenues declining 18%, but their cost of sales also declining in line, that paints a good picture for their gross margin, which stayed in line. And so we like to see that. We like to see if revenues are declining, they're able to control costs, especially on those PC sides, and maintaining their gross margins. R&D did tick up, which is a good thing. We did see Lisa Su say they're investing more heavily into AI-powered chips, and so we expect R&D to actually go up, and it's a good thing it's going up. I would not want to see R&D at AMD at this point be shriveling. We saw they were able to control marketing and G&A down fractionally, and all in all, operating income turned to an operating loss of $20 million. A year ago, this was at an operating income of roughly $500 million. And so you see they were able to, their gross profit shriveled up roughly $500 million, and that was passed down exactly to their operating income, and their net income down roughly $500 million as well. We see EPS came in at 2 cents per share. A year ago, that was 28 cents per share. And in terms of a share buyback, AMD is not really buying back too many of their shares, which, considering that their stock is up 83% year to date, is probably a good thing. Moving on to the balance sheet, we see this is on a 6-month basis, so not a year-over-year basis. Cash and cash equivalents down to $3.8 billion, down from $4.8 billion 6 months ago. I do want to highlight inventories as they went up from $3.7 billion up to $4.5 billion. And we know on the commentary AMD did provide the fact that PC gaming has slowed down, and so a lot of their PC makers are holding excess inventory, which ultimately would cause AMD to hold some excess inventory, which it would normally push out to these PC makers. We see their revenue over this past sort of 1.5 years, these last 8 quarters. In 2021 and 2022, we saw revenues increase steadily as there was that sort of chip shortage and high PC demand, which caused lots of AMD revenue to be pulled forward. And over this past year now, we've sort of moved away from that shortage to a chip excess and a PC excess, where PC makers are unable to move these PCs at such a high volume and thus are holding excess inventory. And so their revenues have sort of flatlined. But as this inventory sort of moves through and PC gaming demand picks back up, we can hope revenues and earnings continue to increase as expected by analysts. All things considered, this balance sheet is looking very strong. Total current assets coming in at $16.5 billion versus a total current liabilities number of $7.5 billion. And so that's a current ratio well in excess of 2, which is what we like to see. We see a bit of their long-term debt rolled on into a current portion of short-term debt. Moving on to the statement of cash flows, we have that $27 million of net income from this most recent quarter. We get to add back things such as depreciation, amortization, certainly stock-based compensation we get to add back, and we see this has increased over the past year for AMD, and I honestly don't mind stock-based compensation increasing for the management team at AMD over the past year, as their stock has heavily outperformed, and so they certainly deserve a pat on the back for that. We see inventories, they did take a larger loss this year compared to same time last year on the inventories. As we mentioned, they're holding more and more inventories. Taking a look at cash received from the acquisition of Xilinx, we see that acquisition was likely completed in Q1 of 2022 as they bolted on some cash at that point last year. In this most recent quarter, it looks like they did not do any acquisitions, and this acquisition of Pensando was realized last year. Taking a look at cash flow for financing activities, we see they didn't purchase any more common stock in this most recent quarter, and last year they were buying roughly $1 billion of stock in that quarter, and last year the stock price was looking far lower. Taking a look at AMD's revenues by segment, we see they have a data center down roughly 11% year over year. The operating margins on this data center business is not very good as of right now, but their majority of their revenue hit and EPS hit came from this client segment where revenues declined 54% as we saw, and this is due to that slowdown in PC demand. Gaming was down roughly 4%, and embedded slightly higher, and embedded was actually the bright spot in this revenue segment, which was up on a year-over-year basis. Taking a look at AMD from a technical chart pattern, I see this one is trading at roughly $121 in the after hours, in line with that green line, and we see it's been on a stellar run over this past few quarters. We can see from its lows, AMD is up roughly 130% if you include these after-hour gains. And in terms of a support and resistance level, well, over the past year, there's not been a whole lot of resistance that's held AMD back. We do see at this roughly $130 range, AMD should run into some level of resistance. We can see back here it acted as resistance, and more recently in June, it acted as some more resistance, roughly in that $130 range. So I do expect some sellers to materialize at that point. However, if it can get past that $130 point, there's not a whole lot holding the stock back from reaching $150 in a hurry. And so that first level of resistance I would see as at 130, and then further up from that I see resistance at 150. And so certainly if it has a breakout over 130, sort of a big green candle, if it puts up, I would not blame you for buying this one on a run up to 150. As of right now, I would hold back on diving into AMD. I do think it is certainly expensive. Its valuation has caught up, trading at a 40 forward price to earnings, and so in terms of pullbacks, I would wait for a further pullback, likely towards this $110 level. It acted as a resistance a few times in the past, all the way back in 2021, acted as resistance in 2022, and has recently acted as support. And so this $110 level is where I would first be excited to pick up some shares of AMD. However, south of 100 is where I see the risk reward becoming very attractive in this one. It's roughly around 20% higher from that, and so certainly not out of the question to retest these levels at $100, but I think I see buyers materializing near this $110 level. that was AMD for you guys. Certainly investors are giving this one a pass for these most recent quarters, and especially this last quarter it just posted, and are looking more towards future quarters where they're expected to grow substantially on the basis of these AI chips and supercomputing for large companies such as Microsoft and Amazon. If it continues to hold its market share, continues to gain dominance from an Intel, and really stays even in that number 2 spot right behind NVIDIA, it certainly has a long runway ahead of itself, as the AI run is just starting. And if you really believe in companies like Microsoft and Amazon really figuring it out in terms of these AI servers, well, then AMD is certainly positioned in the right place for that. That was AMD. Let me know what you think of this one in the comments below. Do you think this is a buy, sell, or hold at these levels? As always, thanks so much for listening, and I'll catch you guys in the next video.